Hey, this is Ali from FX ORDERFLOW channel, and in this video I'm using level 2 data to do a market review on S&P 500 for June 20. So we had a really good opportunity for sell on June 20, and unfortunately I missed that trade because I was away from charts for a few days, the last few days, and that's exactly why you should watch the market every day. Otherwise you miss good trades like this. So on June 20, we had continuing war news for Iran and Israel, and there was some rumors and news about USA that Trump is sending B-2 bombers to Middle East, which is not a good sign, and there's a possibility of USA to get involved in the war, which is really bad for S&P 500. So as a trader, if you want to trade S&P 500 on June 20, you should know that that day, at least on that day, you shouldn't be looking for buys. And if you take a buy, you should know that it's against the trend, at least the trend for the day. And you should exit your trade much sooner than you usually do. So yeah, the best thing to do is that just take sell trades. Don't take the trades against the trade, which is really dangerous and risky. So on that day, this is hourly chart. We had a really good area based on volume. It's called value area high. It's these two orange lines. So if I do that here, so then the area was from 2 days ago, and as you can see on June 20 we had really good rejection here and the market dropped really good. And the next day, after USA bombed nuclear facilities in Iran, the market opened with a gap. As you can see, market was closed here on June 20, and then on Monday when the market opened, we opened here, which is a huge gap. So yeah, this was a really good sell trade here, and good for the ones who took it. Let me show you 1 minute chart and the entry trigger. So the NYSE open was 5 o'clock on my local time here, and market dropped immediately after open. We had a good absorption buy here and a few more here. So usually when you see absorption buy on the market, it means that a passive seller is blocking the buy orders. So it's a good sign for dropping more in the market. But the confirmation for that is an aggressive seller that sells off really hard after. And as you can see here, the only candle that the sells what was a lot in it was in this candle, and it wasn't like that much. The movement wasn't that much. And you could potentially sell here, but the stop loss is way too big if you want to take that trade. So it's best to wait for a retest on this volume because it's the first minute of opening NYSE, and it's a initial balance for me and for those who take trades based on volume. So you might want to wait for a retest here. But as you can see, after these 3 sells, there's not much sellers. And after all these absorptions, which is really big numbers here, you should expect a really good sell-off, not just 3 candles with like low minimum deltas. This is not enough sells for me if you want to take sells after this candle. So yeah, as you can see, the buyers was keep pushing. Even if you put a sell limit here and want to enter here after these candles, a few candles after that, you shouldn't take that. It's obvious that market wants to push higher. So even though we had a good passive seller, but it doesn't want to push market lower right now. If the passive seller was intended to push the market down, we should have seen much more sells here. So we don't see them. It means that market want to go higher. So we pushed this high, and we had a really massive buzz here, which was absorbed by a passive seller. This is a really good sign when you see a block of buys being absorbed by a passive seller. So after that, as I said, we have to wait for the confirmation. What is the confirmation? A huge amount of sellers, okay? So we see that sellers on this candle. As you can see, the delta is really negative. I I would like to see at least a 400 lots of negative delta, but that's also good because we pushed really hard with this much sells. So this is your confirmation candle. You can sell here and put your stop loss above that. But before I continue to explain about this trade, there is a tricky candle here, which is this one. So sometimes, as you can see, the market just dropped below the block, with obviously with a lot of sells. I don't know what happened on the live when the market was like pushing down at the moment, because I was not looking at the charts. But if, as you can see, look at this candle. We had 1,700 sells, almost 1,700, and 1,700 buys. You had like 70 more sells than buys, so the delta is negative, obviously. So if the sellers was pushing first, for example, at the moment, maybe the delta when we were pushing down was like 400 negative. If it was like that, I would immediately enter the trade. Okay, so sometimes like that, you enter a trade and then buyers can't come in before the candle closes. And something like that, if happens, you see this is not a good sign, closing bullish with a negative delta. But on the next candle, we were trying to push harder, we had another absorption, and then the seller came inside this candle. So if you see a block and you're really sure about your area, this area was really good value area, and also the block, we had a block and good absorptions, you can hold your trade here, because the market, although the market is not pushing down right now, but there's a high chance that it will on the next few candles. So if your stop loss is in a safe place, for example, if you sell here, your stop loss should be around here. Okay, so if your stop loss is in a good place, yes, you can hold your trade. But if you're not sure about your area, and also the absorption that you're seeing is not strong enough, after you see that, you should immediately exit your trade on a small loss. It's better than hitting the full stop loss. So yeah, but if the market, when the market was pushing down here, if the market was not having like a really huge negative delta, you shouldn't enter this trade. At least you should wait for the closure. Yeah. So if you would enter here, your stop loss would be around 8 to 9 pips. 9 pips would be much safer because we have an unfinished auction here. We might make a new high here with like 1 pip higher and then push down again. But as you can see on the next candle, we had a really massive sell-off. Look at the buy and sell difference on this candle. It's almost 1,900. It's 900. And it's a lot. And then we kept selling down. So it was a really, really good trade. If I want to see the risk reward ratio, the entry would be around, if I want to put it down here, we would enter around here. Yeah. So with 9 pip stop loss, you could, for only Friday, you could take 61 pips. But if you would hold it, because there was a chance that Iran getting bombed by USA, you could take 100 pips, even more, if you consider the gap. But even if you want to like close it at the moment that the market opens with a gap, it's like 100, almost 100 pips. It's like the risk reward ratio is almost 11, which is a lot, for this trade, and it was a really good trade. Unfortunately, I couldn't take that trade. I was away from the market. So yeah, this is June 20 for S&P 500. And by the way, these candles are 1 minute candles, and the numbers that you can see on the candles, like next to the candles, are the sum of buys and sells. So yeah, that's actually level 2 data, because you know the orders, how many orders are getting executed by limits or aggressively executed by retail traders, and also mostly by institutional traders. And yeah, for example, on this candle, most of the volume is obviously not retail traders, because the maximum lot for S&P 500, if I'm not mistaken, is like 50 lots for retail traders. So it might be even less, like 25 lots. It's probably 50 lots, yeah. So if you're a retail trader, you can't open a trade bigger than 50 lots. And on this candle, just one order, one of the orders was like 484 lots. This is obviously not a retail trader. So yeah, this is level 2 data. And this is for June 20. We had more trades also on the week, but I'm not going to make a video of them because I didn't take any of them. I was away from the charts. And yeah, this is for June 20. If you liked the video and it was useful for you, like and subscribe. See you on the next one.